Assalamu alaikum friends, welcome to part 2 of taxation. So in part 1 I was discussing about section A where I went through 15 questions. Now I'm going to go through section B where there'll be 10 questions and each there is a case study on the left, and if you can see, even you don't have to read the whole case study, just by seeing one word, you get an idea what type of tax they're talking about. So here, if I can see, they're talking about IHT, inheritance tax. So this is about inheritance tax, okay? And inheritance tax is something which is often asked by examiner because there are a lot of areas to be asked from this portion, okay? So let us start. Before that, let us read the requirements first. What is the maximum nil rate ban? We know the maximum nil rate ban is 325,000. Okay, for a year. But in this case, what is the maximum nil rate ban which will have been available when calculating the IHT of 566,000 payable in respect of Adana's chargeable state? Definitely not all of this information we need for this, okay, because this same case study will be there for the other questions also. Based on this, there will be 5 questions. Okay. So the moment when calculated the IHT of 566 payable. So and antenna died on 17 March 2021 with IST of this and is payable in respect of a chargeable state. Under the terms of a will, Adena left her entire estate to her children. So all those things are not needed for this one. Okay. What we need is that the nil rate ban, available nil rate ban. Okay. So from this, okay, we know that 20% you have to take it out. So that means 80% of 325,000 plus 325,000. That means total of 585,000 nil rate ban. Okay. We have an option here. 585,000. How? Because 325,000. Okay. And then if you see here, Adena's husband had died on 20th May 2006 and only 20% of his inheritance tax nil tax ban was used on his death. So from his death also you will get that inheritance tax, the nil rate ban. Only 20% he used. So 80% from his husband you will get. Okay, even though they are saying the nil rate ban for 2006-7 is this much, okay, we'll be using 325,000 only. Okay, that 80% will be applied on 325,000. So 80% on 325,000 plus 325,000 of hers, Adana's, will be 585,000. That is the maximum. Okay. Next. So let us read the whole if you want. So this is what is the total amount of deductions which would have been permitted in calculating Adana's chargeable state for IHT purposes? Okay, so let us read that the date of her death, Adana had the following debts and liabilities. Okay, what are they? Outstanding interest, old mortgage, income tax, legal fees incurred by Adana's sister, which she had verbally promised to pay. Adana's husband had died on 28th May and 20%. Okay, this we read. On 20th April 2022, April 2008, Adana had made a chargeable lifetime transfer of shares valued at 500,000 to a trust. Adana paid the lifetime IST of 52,250 arising from this gift. If Adana had not made this gift, her chargeable state at the time of her death would have been 650,000 higher than it otherwise was. This was because of the subsequent increase in the value of the gifted shares. Okay. Too many things to digest, right? Sometimes you become confused what to take, what not to take, and all. This is why practice, you have to keep on practicing IHT. Okay. In fact, IHT is an area where practice is required more than other areas because this is a big area and it's easy to forget. Okay. And the same, if you're good in taxation, remember when you're taking advanced taxation in your P levels, that's an optional paper, but some of you might take taxation. So there, this will help you. This knowledge will help you because it will be repeated there in more advanced level. Okay. So what is it? One is the outstanding interest only mortgage. Okay, this will be deducted, and 43,700 this will be deducted. Just do not this, because this is verbally promised to pay. Okay, so this too will be deducted. Okay, when you're making a death state, make sure what are the deductions there. Okay, so this two are deductions. 220 plus 43,700 will be 263,700. Okay, next. So the case study is same. So indicate by clicking on the relevant boxes in the table below who will be responsible for paying the IST of 566 in respect of Adana's chargeable state, and what is the due date for the payment of this liability. You have to know in any tax, whether it's VAT, whether it's IST, whether it's NIC, who is paying. Okay, the question is who will pay and what is the due date. In taxation you have to know this, whatever the type of tax it is. It could be IST, it could be CGD, it could be income tax, it could be VAT, it could be corporation tax. You have to know the due date of payment, how it is paid. Okay, sometimes you pay in one go, sometimes you pay in installments. What is the due date, who is responsible. Okay, you have to know all this, especially for IST, because IST, when someone is dead, you have to know after the dead person who is going to pay for IHT. Okay, so responsible persons. Who is the responsible person? Is it the beneficiary of Adana state, her children, or the personal representative of Adana state? It is the personal representative who will pay in respect of the chargeable state. Okay, what is the due date for payment? There are dates. Okay, it is fixed data there. It is 30th September 2021. In case, okay, this is a hint for those students who kind of forgot. Okay, what is it? That whenever you are paying IHT, it is always paid at the end of the month. Okay, forget about the date and all. If you don't remember also, in this case it is easy. It's not always the same case because both are September. So it's easy for you to select to know which one. It is 30th September because it's always at the end of the month when the payment is due. Okay, in that way you can remember that it's 30th September. Okay, but the rule is like this. Okay, 6 months after the end of the month of that date. So when was the date? 17 March. So you might be thinking 17 September because 6 months from March. No, it is the end of the month. Okay, 6 months after. Okay, after the end of the month of the date. End of the month is 30th September. Okay, both are 6 months, but end of the month. So 30th September is the answer. It's a rule. Okay, next. How much of the IHT payable in respect of Adana state would have been saved if under the terms of a will Adana had made specific gifts of 400 to a trust and 200 to a grandchildren instead of leaving her entire estate to her children? Another thing, in taxation you have to know how much you can save if you're changing your will or you're tax planning something. If you're doing tax planning, how much you can save. This is also a skill which when you're coming to the tax you should know. Okay, so how much can you save? Right, the answer is 0. Why it is 0? Because neither gift would have made any difference to the amount payable. Neither gift, whether specific gift to the trust or the 200 to the grandchild, will not, I mean, you cannot save anything. Okay, so that's why it's not going to have any savings, so 0. Next. How much IHT did Adana save by making the chargeable lifetime transfer of 500 to a trust on 22nd April 2008 rather than retaining the gifted investments until her death? Okay, so how much it is? The death rate is what? It is 40%. Okay, so if you see here, just read the last paragraph. Okay, on 22nd April 2008, Adana had made a charitable lifetime transfer of shares valued this much. and paid IST arising from this gift. If a debtor had not made this gift, the chargeable state at the time of a gift debt would be this much higher, 650,000. If he had not made the gift. So they are saying if he rather retained the gifted until her death rather than. Okay, so first you have to know before giving the gift. Okay, you have to know how much they are going to pay. Then only you know how much they are going to save, right? So they have paid how much? 52 to 50 if gift was there, but if they would have retained it, it would be 650,000. So 650,000 into 40%. Why? Death rate is 40%. So on this 40% minus, okay, you want to find the difference with this 52 to 50. So they are going to save this much when you get the difference. Next. This is our next case study. Okay, so there are two case studies. On one case study, 5 questions are there. Next, another 5, so 10 questions in section B. Okay, so here I can see this is about something to do with indexation allowance and all. Okay, so what amount of indexation allowance will have been deducted in calculating the chargeable gain of 127,000 on the disposal of Cat Limited's factory? Okay, so we have two. One is Cat Limited, the other one is Kitten. Okay, so Kitten part we don't have to read for this. We'll just read the Cat Limited. Kitten is the controlling shareholder of CAT, an unquoted trading company. Okay, let me highlight yellow. Okay, I think yellow is better color. CAT Limited sold a freehold factory on 31st May 2004 this much, which resulted in a chargeable gain of this much. The factory was purchased on this and the further capital improvements were immediately made at a cost of this month during the month of purchase. Further improvements to the factory were made during the month of disposal. The indexation factor is this much. CAT is unsure about how to reinvest the proceeds from the sale of factory. The company is considering either purchasing a freehold warehouse or acquiring a leasehold office building on a 40-year lease for a premium of this. If either reinvestment is made, it will take place on 30th September 2021. All of the above buildings have been or will be used for the purpose of CAT Limited's trade. Okay. So how do you start? I hope you understood the question again. If you did, let us read again. What amount of indexation allowance will have been deducted in calculating the chargeable gain? Deducted. The deduction you have to calculate. So definitely the cost and all you have to take. Okay. Already the indexation factor has been given to you, 0.439. You just have to multiply it with the cost. What will be the cost? It will be factory was purchased on this. So it's this 138,600 plus this also 23,400. See, capital improvements is a question mark. We don't always take. There are conditions to be met. In this, we are taking. Why? Because it is during the month of purchase. When the capital improvements is in the same tax year, that means month of purchase, you are taking it, adding it with the cost. It will be taken as cost. So this 138,600 plus 23,400, on that you are multiplying this indexation factor because that will be deducted to find the chargeable gain. So the total is 7118. Okay, next. Here, if CAT decides to purchase a freehold warehouse and makes a claim to roll over the chargeable gain on the factory under the rollover relief rules. Okay, there are rules under rollover relief. Okay, what will be the base cost of the warehouse for the chargeable gain purpose? So what will be the base cost? Let us take a calculator. Okay, so what is the cost? Okay, so it is this. What is the purchasing? What are you purchasing the freehold warehouse at? What is the price? You are purchasing it at 272,000. 272,000. Okay, so it will be a little bit a long calculation for you if I show you in the calculator, but never mind, let us show this. Okay, so minus, okay, when you are taking, what was the chargeable gain from freehold factory? It was 12700. Okay, these are rules. Okay, I'm following the rules, so don't be confused why I'm taking this. To understand this, why I'm deducting by this and this, when you go through the rollover relief, you will understand. Okay, from chargeable gain, you are deducting what? Chargeable gain will be reduced. Okay, you are deducting what? You are deducting what? So you sold at this. Okay, you sold at this, and it is costing this much, 272. That means what? You are not utilizing the full amount of the sales. You're not, whatever you are getting by selling this, the full amount you're not utilizing to buy another warehouse. You are keeping some with you. That's why the difference between these two. Okay, the difference. Okay, so your chargeable gain of this will be reduced by that difference, and then you deduct it with this cost to find the base costs. Okay, that's why we are deducting 364,000 minus this cost, 272,000. So it is 243, 300. Okay, the next one. If CAT decides to acquire the leasehold of his building and makes a claim to hold over the chargeable gain on the factory under the rollover relief, what is the latest date by which the handover will crystallize? Dates very important. Okay, so here, is it 10 years from 31st May 2020? No. It is the date when the office building is sold. No. 40 years from 30th September 2021? No. 10 year. Okay, whenever the rollover relief comes, remember 10 year. This will help you somewhat to decide. Okay, 40 years not in the option also. So 10 year from 30th September 2021. Why 30th September 2021? Why 30th September 2021? It will take place on 30th September 2021, the reinvestment. Reinvestment will take place on 30th September 2021. From that day, 10 year onwards. Okay, so 10 year from that day, this will crystallize. This is the rule under rollover relief. Next. What cost figure? Okay, so we are now talking about the kitten here. Okay, we need to read the kittens part. Kitten sold 20,000 ordinary shares in CAT on this date, which resulted in a chargeable gain that is qualified for business asset disposal relief. Kitten had originally subscribed for this many shares on this, and on 22nd September, he had made 2 for 3 right issue, took up her allocation under the right issue in full, paying this much, and also sold an antique vase, which resulted in a chargeable gain for the tax year, had made a taxable income. So there are many things here. What are those things? What are those things? Sold antique. So one is antique, one to do with right issue, the shares and all. The other one, he has a taxable income also. Okay. So you need to hold on your nerves because it's easy to get confused what to do with this, each of this. So the question is, what cost figure will have been used in calculating the chargeable gain on Kitten's disposal of 20,000 shares in CAT Limited? Now they're only talking about the disposal of 20,000 ordinary shares. So we are not taking in the taxable income of the antique vase. Okay. So here, how do we do this? It's a long calculation, right? I don't know whether you'll be able to understand or not if I do it in one go. But definitely let me, okay, I don't have the answer here. So here, just give me a minute. Okay, so it goes like this. First we are taking the 90,000. Okay, then you are adding the right share issue. What is the right share issue? They told he made 2 for 3 right issue. That means 90,000 into 2 divided by 3 into 6.4. Okay, you are adding both, and then you are multiplying by 20,000 shares because he sold 20,000 shares. Okay, so let us do this in the calculator to better understand. Okay, 90,000, add the right issue share component part plus 90,000. Okay, into, now you can put a fraction form. Okay, when you want to put something in fraction form, you can click this N over D. Okay, it will come in fraction. So 2, and then when you want to go down, press this 3. Okay, and then press this into 6.4 because the price is 6.4 for right issue. Okay, next, close the bracket. Okay, so now multiply it by 20,000 because 20,000 you have sold. So this is the amount. Okay, divide this by 90, the number of shares. Okay, so 90,000 plus 90,000 into, again, 2 over 3. Sorry, 2 over 3. Okay, when you want to just delete one digit, press delete. Do not press clear. When you press clear, it will clear everything. Then again you have to read from start. Okay, delete will just delete one digit before, but when you clear, it will clear everything. So now you want to close the bracket and enter. It is 63,200. Okay, next, what is the Guinness capital gain tax liability for the year? Now you have to take all the three, the Antiguas and all those things, because the question asked. Let us go to the kitten. Capital gain tax liability. Okay, so how do you start with this? Okay, so you have a chargeable gain, and remember this qualified for the business asset disposal relief. Okay, 142,200. Okay, so this you have to take in 10%, add with, okay, this 28,900, the chargeable gain, the antiguous, minus 12,300 into 20% you have to take. Okay, let us again go and see the tax table. So the higher rate is 20%. Okay, the lower rate is 10%, but for 142,200 this chargeable gain we are taking 10% because it qualified for a relief. Okay, next, just wait a minute, I just want to see the allowance. Okay, so here 28,900 minus 12,300, take 20% of that, and on this you are taking 10%, adding both, it will lead to 17,540. Okay, And next we have this. This is the third case study, and this is they're talking about VAT. So let us read it. Alyssa commenced trading on 1st of Jan. Her sales since commencement was this. Okay. The above figures are stated exclusive of VAT. Alyssa only supplies services, and this all are standard rated for VAT purposes. Alyssa notified her liability to compulsory register for VAT by the appropriate deadline for each of the 8 months prior to the date on which she registered for VAT, paid 240 per month, inclusive of VAT. Inclusive means VAT is there, exclusive means VAT is not included. For website design service and 180 per month exclusive of VAT. For advertising, both of these applies a standard rate for VAT purposes. Standard rate is 20% and relate to Alyssa's business activity after the date from when she registered for VAT. So from what date would Alyssa would be required to compulsorily register for VAT and therefore have to charge output VAT on her supplies of services. So what is it? You have to decide. Okay, how do you decide? You need to do workings over here. It's not guessing work. Okay, so from January to April, January, February, March, April, 4 months. Okay, so 7,500 per month. So 7,500 into 4, which is 30,000, and May to August, another 4 months. So 4 into 10,000, which is 40,000. So add the 30 and the 40,000, and then September to December. How many months? September, October, November, December. 4 months. Sorry, but you cannot take the 4 months. Okay, you only have to take for the September 2020. So when you're taking September, it will just be 15,500. So add the 30,000 plus 40,000 plus 15,500. Okay, why you are seeing the limit? You have to see the limit. You have to see whether it is exiting your limit or not. What is the limit? 85,000. That is the registration threshold limit. It should exit that. So the registration threshold 85,000. Okay, it exited. Is met by 30th September 2020. Okay, you have to stop at the date when it exit 85,000. That's why we are only taking 1 month. Okay, so when you're adding January to April, 30,000 plus 40,000, you have to stop when it exists. Okay, so when you're taking even 1 month, you see it's exiting the 85,000. So that means from that day you have to register for VAT compulsorily. 30th September. So that's when will you notify? They have to notify HMRC by 30th October 2020 with the registration effective from 1st of April 2020, one day after that. Okay, therefore the answer is 1st of November 2020. Because 1 month from the date when the registration threshold exited. So it exited on September. So you have to notify by 31st October. It will be effective from 1st of November. Okay, one day after that. These are the rules of VAT. Next, what amount of pre-registration input VAT would Eliza would have been able to recover in respect of the inputs incurred before the date when she registered for VAT? Okay, there are some pre-registration input VAT also which you can claim, provided certain conditions are met. Okay, those conditions are there in taxation. You have to learn those. So what is it? It is definitely from here, this part. Okay, so 240 inclusive of VAT. When they are saying something is inclusive of VAT, what should you do? You have to take out the VAT. Take out the VAT. Okay, so how do you take out the VAT? That's simple. Whenever something is inclusive of VAT, what do you do is you take 240 into 20 because VAT is 20%, divided by 120 because it is inclusive of VAT. With that 100, you have already included 20% of VAT, so 120. Okay, divide by 120. Don't take divide by 100, otherwise it It's like you're taking 20% of 240. You're not taking 20% of 240. You're taking 20% from 120. You're taking the VAT from the 240, which will be 40. Okay, with this you are adding what? 180 into 20%. 180. This is exclusive of VAT. So you have to take 20% of VAT. Okay, you are only adding the VAT into 180. Okay, close. 76. It's not over. You need to multiply this by 6, which is 456. Why multiply by 6? Why multiply by 6? Because only 6 months before that you can take. When you are taking pre-registration input, that means before registering for input VAT, okay, what you can recover is only 6 months. That's it. 6 months before. So that's why we are multiplying it by 6, because this 180 and 240 when you took, it's per month. So you have to multiply it by 6 months. Okay. Next. What is the maximum amount of input VAT which Alisa can reclaim in respect of her motor expenses? So for motor expenses, okay, let us read. This paragraph. Okay. After registering for VAT, Alisa purchased a motor car. The motor car is used 60% for business mileage. During the quarter, he spent this much on repair and this much on the fuel for both business and private mileage. Okay, and the quarterly scale charge is 290. See, quarterly scale charge they will give you 290. Okay, all of these figures are inclusive of VAT. VAT is there. You have to take out the VAT. All of the Alice's customers are registered for VAT, so she appreciates that she has to issue VAT invoices when services are supplied. Okay. So, how will it be treated? So what you're going to do is this 456 and this 624. Okay, add both. Again take VAT because it is inclusive of VAT. So into 20 divided by 120, which will be 180. That's it. You can claim this and you can claim this. Okay. Next. Which of the following statements regarding the due date and the payment method for Lisa's VAT liability for the quarter ended 31st March is correct? Okay. So what is it? Alisa must make an electronic payment to reach HMRC by 7th June. Okay. Alisa has the option of making either check payment or electronic payment to reach HMRC by 7th June. Alisa has the option of making either check payment or electronic payment to reach HMRC by 7th May. Alisa must make an electronic payment to reach HMRC by 7th May. So if you see, all these are options. Okay, this second and the third options are out. You don't have an option, first of all. And the first and the fourth one are in the options. So the only difference is the date. This is 7th June, this is 7th May. Rest all is correct. You have to make an electronic payment only. But what is the date? Is it 7th June or 7th May? It is 7th. That is also correct. But the month, June or May, it is May. Why? Because 1 month and 7 days. 1 month from 31st March and 7 days. So 1 month from 31st March will be 30th April and 7 days. So from 30th April, 7 days will be falls on 7th May. Okay. That's the rule. Okay. 1 calendar month and 7 days after the end of the VAT period, electronic payment is required. Next. So this is the last question for section B. After this, we'll be heading on section C, which I will be covering in part 3 of the video. Okay. Identify by clicking on the relevant box in the table below which of the following items of information is not required to be included by Alisa on a valid VAT invoice. You have to know what are the things to be included in a VAT invoice and what are the things not to be included. Okay. Is it the customer's VAT registered number? Not required. Okay, customer's VAT registration number and invoice number, customer's address, description of the services supplied. It is the first one. Okay, I don't think you have to read a case study for this. This you can answer from your knowledge. So with this, I have completed section B question. Okay, section C you can see 40 marks in total. Okay, you have to write. And if you see, this is how a section C question looks like. Again, a case study is here, but on the right side, if you see, there are no options for you to select or write one answer. Okay, you are given an Excel, so you have to do workings on Excel, and if you see, it's for 10 marks. Okay, what are you supposed to do? Calculate the overall saving of tax and NIC for the year ended if Joe had instead paid himself gross, director's remuneration, and dividends. Okay, a lot of things are there to do in section C, which makes section C the hardest section of out. Out of all the sections, section C is the hardest in any paper. Okay, so that's why I always, the reason I separated it from the other two sections is because I need to pay more attention in section C, and it takes long time because discussions are required. A lot of discussion needs to be there done. Each step needs to be explained, how you are going to do in Excel or Word, how to come up with the points, how to write theory points. All this will be covered in section C, which is part 3 of the video. So with this, I end the part 2 video here, and hope to see you in part 3. And don't forget to share this video with your friends, okay, who wants to know what is tax all about, how it looks like and all. And this is UK tax. Okay, so that's it, and take care.